Everyone to Daily Mortgage Rates Live with the Mortgage Calculator. We're going to wait just a couple minutes to get started as usual. Give us a chance to go live on all the different platforms. We are streaming this on YouTube, Facebook, Instagram, and LinkedIn. So give us a second just to go live on all these different platforms. We did put the chat up there on the screen, so you can drop a comment in the chat. In the meantime, thank you for everybody who was already dropping comments and tuning in. We'll get started here in just a moment. Good morning to everyone. Good morning to those of you who were dropping comments in the chat before. Looks like Daya and Julio, Africa, thank you for tuning in. Gia, good morning. Good morning to the Mortgage Calculator team tuning in. All right. Looks like we are good to go. So let's go ahead and get it started. We'll go ahead and take the chat off the screen and we can get into it. So welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every morning is go through the live mortgage rates for different programs. And then we do a deep dive into a different topic every day. Now, today's topic is something that we very much specialize in here at the Mortgage Calculator, which is no ratio DSCR loan. So DSCR, debt service coverage ratio, no income needed, no employment verification needed for an investment loan. That is our specialty here. And today we're going to talk about the no ratio DSCR loans. So our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, is going to do a deep dive into that topic here momentarily. But before we do that, let's do what we do every morning, which is go ahead and pull up our pricing for the different loan programs and see what the rates are. So Nick, let's go ahead and pull up our pricing tool and see what the market is looking like this morning.
All right, let me switch my screen. We'll get started. So as Kyle mentioned, this is our pricing tool for our mortgage professionals. This allows us to see the general rates and APR, including all the fees for our programs. It is June 29th, just after 11 a.m. Eastern, so all our standard programs are live. If you'd like a full loan estimate with a breakdown of all the fees that go into the APR, please get with our team members. We have over 300 licensed loan officers. We can do primary second homes in 24 different states, and we can do our DSCR business purpose that Jose is going to present a little bit later in 44 different states. So for all of our demos today, we'll set up a exact same scenario. That way we can compare APRs across the programs. So we'll set the loan amount to $400,000. We'll set the LTV here to 80% loan, 20% down payment. We will set the desired price to $99. That means we're going to ask the computer to find the best rate at one discount point in cost. Typically, most people ask for that now, so that's our typical request. And we're going to compare our different programs. We'll start with conforming conventional. Then we'll check out the FHA programs, and then we'll go into our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs that most other lenders don't offer. We also offer VA and USDA. VA is only for eligible vets and active service members. So since not everybody's eligible, we don't do that live. But if you are, we'd be happy to quote it. And same with USDA, that's only for eligible properties. So if you do happen to be shopping in one of those rural areas, let us know, and we'd be happy to quote it up. But let's start today with conventional as we do every day. We'll do a purchase, 30-year fixed, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 and an estimated debt to income ratio of 40%. So with those basic settings, as we do every day, let's check the conventional rates. And not much excitement this week. It's been pretty much the same every day. It's actually just a touchdown. I think yesterday it was 7. This was the best option, 7.042. Today we got a little hair better here, 6.875 rate. for 0.875 discount points and cost. Final APR of 7.037. So remember, APR allows us to compare across the programs. So this is the number that we'll use in order to compare it to the other options. Now, if for any reason our customer doesn't qualify for conventional, typically the next option we want to go to is an FHA option. So we'll set up the same exact demo. Just this time we'll select FHA. FHA does allow a little more credit leniency as well as a higher debt to income ratio. But so we can compare apples to apples, we will keep everything else exactly the same. All we've changed is FHA. And let's check out the FHA rates this morning. Again, not much has changed, pretty much the same all week. Best option here, 6.125 rate for 1 discount point and cost, and a final APR of 6.717. So remember, APR allows us to compare apples to apples. That even includes the FHA upfront and yearly mortgage insurance. So in this case, this option is actually cheaper for our customer that qualifies for both. So definitely recommend our customers out there shopping. In some cases, even if you qualify for both, FHA might be a touch cheaper, which typically wasn't always true. Now, if our customer doesn't qualify for FHA or conventional, that's where we love to specialize. Many other banks or lenders don't have other options really, but that's where we have over 5,000 other loan programs under expanded guidelines, which we'll do next. And that allows us to use alternative income. So we'll keep everything else exactly the same, but now with non-QM, we have our income verification options. So full doc is what's required for FHA, and conventional, that requires 2 years of tax returns. So we'll typically select this option for a different income, such as asset related, business bank statements. Our investor options we'll go over in a second. That's what Jose is going to present, as well as we'll do a couple live demos. Personal bank statements are most popular, so that's what we'll do today. We also have RSU, stated income, VOE, 1099, P&L, no income at all kinds of different options. Most popular, for sure, for a primary home for this demo is a personal bank statement 12-month option, and that's for our self-employed borrowers. Many of our self-employed borrowers, when they submit 2 years of tax returns, have different write-offs, and sometimes can't qualify at all or can't quite qualify for enough income for the home they really want. So in this case, instead of using tax returns, we're simply going to use their last 12 bank statements to determine a debt-to-income ratio, in this example of 40%, using the cash in their bank statements rather than their tax returns. So most self-employed borrowers will qualify for double, triple, quadruple the amount using these methods. So it solves a lot of problems for any borrowers that might be on the edge there or need a little bit of extra help. So non-QM does have a little bit higher rates, but again, these are to solve problems and great solutions for us. But let's check out the bank statement options this morning. So very comparable here. Again, we get excited when the non-QM options are, right there with conventional. So 7.25 rate, almost the same as conventional. 1.75 discount points and cost, a little bit more cost here, and a final APR of 7.342. So remember, conventional was just over 7. Now we have a bank statement option at just about 0.3 higher, not much higher at all. So this is a great option for our borrowers that need that little extra help. We have tons of different options. Not only can we use alternative income, but if we scroll down here, some of these options, there's dozens of them. Some of these at the higher rates may allow things like credit events such as a foreclosure or bankruptcy, so we can get around other guidelines as well once we go into the non-QM programs. So a lot of flexibility here and very comparable rates and terms. Now, before we get into Jose's deep dive, we always want to do our last 2 live quotes for investment properties. So we love to work with investors, whether you're a first-time investor or a seasoned investor with many properties. We have some great options. So we'll set the same demo up, same everything, 80% LTV, 20% down payment, and we'll compare our conventional investment property options with our non-QM expanded guidelines options. Remember, FHA, VA, and USDA are not eligible for investments, so we'll just compare these 2 options here. So everything else will stay the exact same. Notice all we've edited here is the occupancy for this conventional quote. So let's check out the investment property conventional rates. So best option here, computer found 7.375 rate for 3.25 discount points and cost. and a final APR of 7.617. So these are good options, but most of our investors would like to have a higher rate option in order to reduce the discount points. In this case, $13,000 is a lot of money that most investors would like to deploy elsewhere. So unfortunately, conventional has added these price adjustments where we don't really have any one discount point options or higher rate options. So that's where we love to present our non-QM option. So for our final demo here, we will pull up a basic non-QM DSCR option. Jose is going to go into a couple more detailed ones here in a second. We'll set up the same demo. This time we will select expanded guidelines, aka non-QM. And we have a couple things to set here. First, for non-QM, we have to set the income. And the most popular option for an investment property is our DSCR option. And Jose is going to go into our no ratio option here in a second. So DSCR is our most popular loan here at the Mortgage Calculator by far. That's because it doesn't actually require any income from the borrower, any employment from the borrower. We're simply going to use the estimated rental income to determine a DSCR ratio. So if the estimated rental income can cover the mortgage expenses, the PITIA of the mortgage, that's a DSCR ratio of 1.00 or higher, aka the property cash flows on a monthly basis. Now, if we don't quite cash flow on a monthly basis, that's a DSCR ratio under 1.00, and we still have some options for that. So for this demo, we'll always delete this just so we can show all the different options. And the final thing we must select for a non-QM investment property is a prepayment penalty. It is standard to have 3 years, so that's what we always price with. There are options for 0 that will cost more money, and not all programs allow it. So that will limit the loan programs. And same with 5 years. You can do more, and it will save a little bit of money for our borrowers, but not all programs allow it. So we always select 3 years to show the most common options. So with these settings, let's check the DSCR rates this morning. So best option here at the top, 7.875 rate for 0.975 discount points and costs, and a final APR of 7.941. So very comparable there to conventional. And remember, this doesn't require any income, any employment. So our investors, especially our seasoned investors, can do 1, 2, 5, 10 of these loans at a time to cash out multiple properties, purchase multiple properties. So a ton of flexibility. Almost every investor that comes to us and wants to purchase an investment property typically chooses these compared to conventional, just because they're very comparable right now and a lot of benefits afforded for this. So tons of different options here, different DSCR ratios. You'll see some of these as we scroll down. There's dozens of different programs. Some of them will have different prepayment penalty options. So please get with our team. They'll find the best option for you. Some of these may allow things like bankruptcies, foreclosures as well. Some of these may allow things like short-term rental income. So tons of different options. Some at the higher rates allow some other special features. And Jose is going to do a deep dive now into a DSCR loan with a very special feature where the ratio is actually not used, for not required here. So instead of 1 or whatever it is, we're talking about no ratio. So 0.00. So let me go ahead and pull up my screen again. And we'll introduce the topic. So again, no ratio DSCR. We just went over a DSCR that's the standard option, which typically has a ratio of some kind, and that sets the pricing. But as I mention every day, we do have options for under 1.00 ratio, which is kind of the standard, where the property cash flows. But there are no ratio options, aka it doesn't matter what the property cash flows, if it cash flows on a monthly basis or not. These are our options to solve any potential issues we might have with the financing, with the rents. A lot of times this happens for short-term rental properties where we can't get the long-term rents to equal out to the ratio that we need. So we need to use a program that doesn't actually require a ratio. It still needs to be a rental property, of course, but we're not going to use the ratio to determine the pricing and all of that. So I'll go ahead and pass it over to you, Jose, if you're ready. Why don't you go ahead and explain a little bit more detail, and then we'll pull up some pricing examples.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. The no ratio program is a real mind blower because first, the regular DSCR program is amazing. When we talk to our partners out there and our borrowers out there about what we can do with this program, their eyes get all big and glazed over, and they start thinking all these properties they're going to buy. Well, with the no ratio program, that is on steroids, because this program actually lets you finance a property that is not cash flowing at 100%, up to a 75% loan to value. This is amazing, not just for your regular long-term rent transactions, but also for your short-term rental transactions. Because if you're looking to purchase that property, amazing trophy property, but there may not be any short-term rental comps through AirDNA in the area, because you're going to be the trendsetter. You've identified a niche that nobody has capitalized on. You want to be the first one to do it. That's great, because with this program, you do not need any type of rental income comparables to equal 1.0 or greater for your debt service coverage ratio, because we let you go theoretically down to zero. Now, obviously, it's not going to be zero. There's always going to be a number there. But whether you're at a 0.75 to a 0.99 debt service coverage ratio, or whether you're below a 0.75 debt service coverage ratio, we can do those transactions. And to refresh your memory on how we reach the debt service coverage ratio, it is determined by gross monthly rent divided by total housing expense, which would be principal, interest, tax, and insurance, and if applicable, association fee, right? If it's a condo or a townhouse. So this is great. Now, how we determine the gross monthly rent is where we get creative with this program. Usually, when we're using, AirDNA, when we're using short-term rental comparables from the platform where the seller has had the property, or where if it's a refi where the borrower has had the property, and we usually require 12 months history on those. So if it's a purchase and the seller's been doing that, great. Hopefully the seller will provide it to you so they can move on with the sale of the property. And if it's a refi, hopefully you have the last 12 months. However, if that is not available, and if AirDNA is not available, you really want the property, you have a great business plan, it's going to work, then this is the way to do it for short term, as well as a regular long-term rental property that you're going to greatly improve it. That the rents out in the industry in general are upward, right? The trend is up on the rents, especially if you have people that haven't been able to purchase a property. They've been looking, but they've been locked out of the market because it's just so little inventory. So there's even much more demand for rental properties out there. In our local market here in South Florida, rents the last 2.5 years have pretty much doubled. So that should let you know why the debt service coverage ratio option is so popular. But again, we have this solution for those properties where you may not yet have the comps for the rentals, but it's going to happen. We can make it happen for you. So here in our first example, and let me increase my screen size a little bit here so you can all see it a little bit better. So here we're looking at a no ratio for a 1 unit that allows a debt service coverage ratio between 0.75 and 0.99. So that's anywhere. So that means that,
so not quite a no ratio. That's a small ratio.
Right. Yeah. You're covering 75 to 99% of the housing expense, but you're not covering it, right? So normally that would not be possible. And in the commercial world, a lot of times they want like a 1.2 DSCR. So here we have great option. You're looking at 9.125 is actually offering a little bit of a lender credit there, and you can buy it down all the way to 7.75%, and this is at a 75% loan to value. So if you remember some of the rates Nick just gave you for the investment properties full doc, and you're looking here at a no ratio at 7.75, very amazing product. So this is for a 1 unit property. We got great news for the 2 to 4 unit investors, we love those house hackers. Well, guess what? The rate is exactly the same. There is no adjustment, no loan level price adjustment for a 2 to 4 unit at a 75% LTV, which is a max LTV on a purchase for this product. I throw it out there so you can all visualize and empower your 2 to 4 unit property investors. You're looking at 9.125% offering a lender credit, and again, 7.75% being your lowest rate option. So now we go to the true no ratio less than 0.75%. This is the one where they got to pinch themselves and make sure that they're not dreaming when we tell them that we can finance your property that's not cash flowing up to a 70% loan to value, which is pretty amazing, right? You're looking at 10.25% being your lowest cost option. And you can buy it down all the way to 8.25%. So if you compare this to hard money, which is what most investors think and assume is their only option for this type of property, we're blowing hard money away, not just in the rate and cost, but also this is a 30-year fully amortizing full-term loan. This is not a short-term stopgap solution that you're going to have to refinance in 1 to 3 years. This is not a balloon payment loan. This is not an ARM. This is a 30-year fully amortizing full-term loan.
And we even have a 40-year and interest
yes.
and all kinds of fancy stuff too.
Absolutely. Yeah. Absolutely. And then again, for our 2 to 4 unit property, again, same rate, no loan level price adjustments. So it's the same 10.25% lowest cost option and 8.25% lowest rate option. Oh, and one thing I do want to state, all of these scenarios are priced with a 3-year prepayment penalty. However, if your borrower opts for the 5-year prepayment penalty, you will have a lower cost option. And now let me provide you a couple of refinance options. Here is the 0.75 to 0.99 no ratio option on a cash out refi. The great news here is that it is the same loan to value of 70%. All that they do is they adjust the interest rate by 0.125 higher. That's an amazing trade-off to be able to do your cash out refi on this program. So here, 9.375 gives you a little bit of a lender credit, and you can buy it down to 7.875. This is our 0.75 to 0.99 option. And our true no ratio option, less than 0.75 on the cash out refi, is available again up to a 70% loan to value, same as the purchase, and 10.25 is your lowest cost option, and 8.125 is your lowest rate option. So many times we see MLOs out there and borrowers struggling to try to force that square peg through the round hole, when all they need to do is set the proper expectations with their investors and empower them with this type of information, and they will gladly run with it and be happy at closing because they got the property that they wanted.
Awesome. All right. Well, I don't see any questions here, but definitely amazing there. Again, definitely something that we specialize in here and that we love at the Mortgage Calculator.
We'll have to do the 40-year one next week because they do all the fancy amortizations and interest onlys.
Yeah, that'd be cool. Let's do that.
Mm-hmm.
All right, perfect. Well, thank you everybody for tuning in. Remember, we do this show 11 a.m. Eastern every single weekday where we go through the live rates and do a deep dive into a different topic. So thank you for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Have a great day.
Thanks, everybody.
Thank you, everybody.